Yo, right. Good morning, everybody. Happy Friday. This is the morning show here on Stock Market TV. You got me, you got JC, you got Steve, you got Fonz in the house. It's Friday. We got a busy show, a lot going on. We got Kenny Glick on today. We got David Cox from Raymond James on today. He hasn't been on for a minute. It's Friday, so that means it's Crypto Friday. So we'll probably have Louis on the show a little bit later. And if we even have time, we'll bring the Fonz really on the show. I don't even know. We got a lot of people here, a lot to get to. So smash the like. Let's bring on Steve, bring on JC, and let's get started.
All right, we back, baby. We back.
Hey.
Happy Friday. Happy Friday. Strazza still on mute. First time, everybody.
Hey, guys.
2 days in a row with a visor. He's on his visor.
Hold on. You're going to grow a beard now?
Yeah,
No.
a bear beard.
A bear beard.
It's a bear. Get it, JC?
Yeah. Or a bear beard.
I mean, I feel like only you decides to grow a winter beard as it starts getting hotter and steamier in Florida.
It's getting hot out here. It is.
You're the only person I know that travels to the Northeast for the winter and heads down for the summer. Like, that doesn't make any sense.
I was just complaining literally 5 minutes ago.
And you're going to grow a beard in that humidity with the amount that you sweat?
No. Hey, who knows how long this bear thing's going to go on for?
Listen, I know a bad idea when I see one. And that one.
Hopefully it's a very short beard.
I think Strazza's ready to go play golf. He's like, can we get on with this?
No.
Tee it off at 10:30. No.
Wait, I was gonna say, like, Steve is not gonna shave until what?
Until the Qs get back above 500.
Okay.
No, I gotta see it. It's up to me. I reserve. I can exercise judgment.
No, you could be like the Biden administration and just change the rules on recessions. Like, be like, oh, that was not a recession. There's no recession here. Like, you could just like be like, oh, I'm gonna keep the beard. There's no bull market. Like, maybe you like it. Like Spencer likes it.
I mean,
right?
it would be SPY 575 and then a handful of other things.
All right. There's a checklist. But you could change the rules. Rules are meant to be changed in this economy.
That's right.
In this economy, all right.
In this economy, in this administration, the rules are changing. They seem like they're changing the rules in every administration these days. So why can't we do that around here? What do you say we get into the markets, eh?
Rules don't exist.
All right, ladies and gentlemen, we have the Dow futures down 100 points this morning. These days, that is equivalent to 23 basis points. I remember back in the day when 100 points was a big move. 100 points to the downside today. That's 42,500, comfortably 500 points above that key 42,000 level. S&P 500 futures down 20 points. That's about 1/3%. Comfortably 120 points above that 5,600 level. So right now we're at 5,720 for the S&P. NASDAQ 100 futures leading the way lower. We're looking at 19,900, down almost 0.5%. Bonds ripping this morning, up 0.75%, 116.5. You got crude oil flat, just under 70. Just call it 70 even. Copper up 0.5%, 514. Very impressive. Gold, new all-time highs. Once again, 31.15 for gold. Silver up 80 basis points, 35.5, with the VIX up slightly above 19, but still below 20. Over in funny money land, Bitcoin getting the crap kicked out of it, down 2.5% this morning, 85,000 even. Ethereum sucks the most, as usual, down 120 points, down 6%. What a hot piece of garbage that Ethereum continues to be. Solana, after a vicious bounce, is giving a lot of it back, down 5.5% this morning. That's 131 for Solana. Total crypto market cap Mr. Spencer Israel, 2.72 trillion. 2.72 trillion.
All right.
What stands out from this morning's futures, ladies and
Well,
gentlemen?
I was going to mention, speaking of gold, I was going to drop the link in the chat. We had over 1,000 people join us yesterday for our little.
Did we really?
Between our site, between all the streams, yeah, for sure. Of course we did.
That's cool.
And so I'm going to drop the link in the chat. If you missed it, JC, Jason, and Sam talked about some of the recent gold trades that they've made and what they saw, why they worked, and pretty informative stuff. So the link is in the chat, and I'll pin it there as well if you missed it.
More importantly, what the hell we're doing about it, right? Just because gold is going up.
And what you're doing about it.
Think about it. You have investors out there that are watching gold going up every day, and they didn't do anything about it because they're butthurt about their large cap tech stocks. Like, that's the beauty of this market, right? They're irresponsibly long the wrong names, and they're so distracted by the money they're losing that they miss the giant elephant walking right by them, right?
You and Jason share the same disdain for people who don't. It's like people who don't trade commodities. You take it as like
I don't have a disdain for them at all. In fact, I'm very grateful.
Jason gets upset when you say trading commodities is hard, as if you can't just buy.
No, he might think that. I'm grateful. I'm I'm in the Charlie Munger camp that if people weren't wrong so often, we wouldn't be so rich. That is like my mantra, and we have to be grateful for those who are wrong so often, as the late great Charlie Munger was. Shout out Charlie. Closet technician, Charlie Munger, by the way.
Okay.
Quite the observer of human behavior. Strazza's a big Charlie Munger fan.
I mean, who isn't?
Yeah, I like Charlie.
Yeah,
I like Charlie. Was the PCE good for you guys?
No.
Can you explain to us who have better things to do with their lives what a PCE is? Does that have to do with unemployment, or is this one of those inflation things, or are these made-up manufacturing numbers? Which one of those is it?
I believe it stands for the personal consumption.
Personal
consumption expenditures.
Yes, that is correct.
So think of it as really no different from CPI, just slightly different in terms of the way it's measured. It's an inflation data point, and it's the Fed's preferred measure, which is why we have to pay attention to it.
And then what about the CPI? We don't do that anymore?
No, we still do it.
We still do it.
Yeah.
But your Federal Reserve is more interested in this PCE thing?
So is this a little hot, or am I just looking into it too much? Because personal income came in at double what it was expected, 0.8 versus 0.4.
The index itself came in a smidgen above the estimates. So
2.8, 2.7, 4, 3 month.
Is that hot? Does that make it hot? I don't know. I mean, the market's
makes it not cold.
Okay, fine. It's not cold.
And God forbid if energy starts rising,
well,
gas prices start going up again. Yikes.
Yeah, that's been the thing that's
hotter.
No one talks about when gas prices are low, but they've been low now for a while.
Mm-hmm. Now they forget about it.
Yeah, we all forget how low gas prices are, but they've been great.
Speaking of commodities,
forget about it. What does forget about it mean?
Oh man, how much time do you have?
Sometimes it just means,
So guys, did you see the GameStop?
Yes.
Okay, so they decided to buy Bitcoin, and the market decided to penalize them by 22.11%.
I believe they issued senior notes. Let me see.
I think if it had been somebody that besides GameStop, I don't know if this would have happened quite this way. But yes, they issued some debt to buy
1.3 billion of convertible senior notes.
Yeah, to buy Bitcoin. If it had been a more sane company, I don't know if this would have happened, but it wasn't. It was GameStop.
This is a dying video game store, and now they're borrowing money to buy Bitcoin. So market killed the stock yesterday on the news.
Maybe if they'd done this a year ago, right? But
that's right. That's right, Spencer. I think that is the takeaway. That right there is that there was a time back when they were planning this when this headline would have hit.
Yeah.
Not today.
I don't remember when the headline was that they said they were going to be they were going to be essentially day trading
late last summer.
day
or
trading the company's
maybe early
balance.
fall.
They were going to trade the company's balance sheet. They were going to just like use it to trade stocks. I don't know how that ever worked
That was
out.
Q3 or early Q4 of last year.
Was it that recent?
Yeah.
Sheesh.
And they've been talking about the Bitcoin thing. Like that's no secret on Reddit either for a while now.
Okay. Well, yeah.
Speaking of Reddit, why don't the Reddit guys, the Wall Street Bets people, imagine if they just bought Reddit? It wasn't that complicated for them. They didn't have to, you know.
Well, it's a little bit late for that now, but
Reddit.
It's a little bit late. It's in quite the drawdown. Don't know.
Dude, I love that Reddit is getting the crap kicked out of it. This thing is such a piece of hot garbage. I've been, I talked to a lot of people.
No, it's not. What are you talking about?
Let me finish my sentence. So I've been, I talk to a lot of people, right? On a regular basis. And I tell people that I talk to a lot of people. And then sometimes they come back to me. They're like, JC, you really do talk to a lot of people, right? Like, it hits them eventually. And, I remember not too long ago, these fucking idiots were telling me how much their company was worth because Reddit's valuation had skyrocketed and all this stuff.
Well,
so they were using Reddit's valuation to justify their shitty business model. And now that the market is laughing at Reddit, what does that mean about their shitty business model? You know what I mean? Like, what a disaster this is. It's hilarious. So anyway, I'm not long, and I find the whole thing so amusing.
So Reddit, to be clear, has been a tremendous success since its IPO, though.
Yeah, and then in the last month, it is down 60%.
50, yeah.
Yeah. So when those Schmendricks told me about how their shitty business model is justified because of Reddit's valuation, it brings chuckle. I laugh then, I laugh harder now.
A lot of things are down 50%. Reddit, I think, just turned profitable. I think.
Full disclosure, I have been on the Reddit website once or two times in my entire life, and I was so overwhelmed and disgusted by what I saw that I have never returned. Is that just me being an old man, or
no, I'm not going to argue with anything you're saying, and I say that as someone that is there. I'm on it most days. I actually use Reddit for a lot of what I use Twitter for, honestly, truthfully. But
as a social media OG, I look at things like that and I walk away.
I was on Reddit for like two straight hours last night.
It's a cesspool. It's a cesspool.
What do you do on Reddit?
I'm trying to figure out what kind of turtle terrarium setup to get.
Actually, for
why don't you go to YouTube for that?
For the really niche stuff, really like that, Reddit is still the place to be.
Hold on. Rewind for 1 second. A turtle? What?
It's like a weird niche conversation about like turtles and UV lights and heating lamps and stuff.
Did you call it a turtle Tourette? A turtle Tourette?
A terrarium. So
terrarium.
Yeah, Myrtle's getting hooked up. He's getting like a whole new situation.
Wait, your turtle's name is Myrtle? The turtle?
Yeah, no, Myrtle's going to be living big. We're going to put him right here in the corner of the office. He's going to have his own situation. He's going to love it. I got him a waterfall filter with a little like basking perch on top of it. He's really going to be happy.
Can we get back to what's important? Can you throw up slide 2, please?
Not
those on the bingo card. This one is serious. Like, this to me has got to be the chart of the week. I mean, I give myself credit where credit is due. For the record, I give credit where credit is due in general, and this time I'm giving it to myself. Strazza, come on. This is a hell of a chart right here.
Oh, it's great. It's fantastic. That's real. They're not going to go in different directions is the takeaway from this one.
Here, I have a better chart here. Switch that out. I don't know why.
That's a long chart right there.
Throw some gold on top of there.
That's most of my life, that chart.
See, commodities, believe it or not, they're an asset class. And broadly speaking, at the asset class level, they're correlated to a degree. Some go, some
all right,
go.
Throw the first two charts. Let's get back to this. First two charts. So here we go. This is better, right? So what are we looking at here? We're looking at copper futures. So first gold went. And then we're wondering, by the way, Spencer, if you want to drop the link in the chat, we talked about all of this yesterday, but this is really important. Gold went, and we're wondering, why isn't copper going? Where's copper? Why isn't copper participating? Well, here's copper participating. New all-time highs. Okay, great. Now it's like, why isn't oil participating? Why aren't energy stocks participating? And I think it's going to be the same thing. And these charts, to Strazza's point, and Strazza's a ball buster, and he's even acknowledging that these two are dancing together. And if you go to the next one, this is, I know you guys like love your PCE and your CPIs and all this bullshit. These are all made up numbers. We know. These are real numbers. These are not made up things. These are facts. This is what the bond market is pricing in for inflation. So as investors, we have an option. We can listen to your federal government for the data. We can listen to journalists for their opinions on the data. God forbid you listen to economists for their opinions, or you can listen to the bond market. Like for me, when I have those options, like answer D is like so hilariously, obviously the one that I want to pay attention to, that the other ones are embarrassing. It's embarrassing to even suggest that someone would be ignorant enough to listen to those other ones instead of the bond market. Like that's how strong I feel. Like I think about how ignorant you have to be as an investor to focus on those other things, journalists, the government, economists, instead of the bond market. Give me the fucking bond market all day. Tell me I'm wrong.
This chart right here is one of the reasons I feel the way I do about commodities and have.
Why don't you explain to the folks what this is a great chart too, by the way. It's a little cluttered in the upper right. I'm not going to lie. So that's on me. See how I give myself credit for a great chart on the first one, and then I criticize this one. So my bad, guys. I apologize. I'll try to do better next time.
You make it look like there's resistance up there.
I know. It's sorry, guys. Nice. I'm better than that. You deserve better. This is my fault.
So I think
what's going on here.
I think of the tip IEF as basically like you said, a market's indicator for inflation expectation, right? So this is Treasury inflation protected securities versus simple Treasury bonds. So if this chart is moving up and to the right, which it has been, typically commodities move with it. It's not just crude oil, right? It's all the other things you're talking about as well. Copper, energy stocks, gold already going. So seeing inflation expectations kind of move first. I was looking at this chart a month, 2 months ago and saying, crude's not going to break support if this is pushing on new highs. Correct. And that's been the case for a while now. So I think there's a big catch up here.
And let me ask you something as somebody ignorant, because like for me, when I see something that's very obvious, like I trust the bond market instead of journalists, like to me, like that's just common sense, right? But for other people who don't think so logically, what is the justification to listen to data coming from the federal government instead of just seeing what the bond market? Like why do they say, oh, let's ignore the bond market and listen to the government? Like, how does that thought process go? Like for you guys?
I don't think people say that.
Well, here too, the bonds we're looking at here, 7 to 10 years, I believe.
Yes.
So the Federal Reserve is going to have more to do with interest rates at the short end of the curve, and the market's going to have more to do with interest rates at the long end of the curve. So I think it depends. It matters the way the Fed is moving. But you're right. The market's going to determine where interest rates are over longer time frames.
Yeah, the bond market tells the Fed what to do.
I don't know.
The Fed likes to talk too much and move the bond market around, right? Like you say.
Jerome Powell would say that they're data dependent.
Aren't we?
Different data, probably.
Yeah, no, they're looking at
definitely
jobs,
different data.
Jobs,
like definitely. You think this Jerome guy is paying attention to the 2 to 100 club? I don't know.
No, they're looking at employment and inflation.
Dude, Warren Buffett's definitely on our International Hall of Famers list. Like he's definitely like Warren Buffett just keeps buying like the stuff at the top of our list. You notice that?
He's been a big Muff G bull.
Dude, that Muff G, man.
Yeah.
So the Muff G is the Mitsubishi. It's one of the biggest financials in Japan, or if not the biggest financial, right?
That's you see that volume in the Muff G recently? That's Berkshire buying.
Yeah.
That's Berkshire volume. Yeah. Isn't it?
I have no idea. We don't have that kind of transparency in the antiquated TradFi. If this was cryptocurrencies, we would in fact know that it was Uncle Warren. But because the current financial system in the United States is so antiquated, we have no idea. We won't know for another 2 weeks, I think, because how criminally slow our government is.
Or
I
we'll
don't know.
never know.
I don't know.
Or we'll never know. Yes, that's exactly right, Spencer. Thank you.
Yeah.
Yes.
First of all, you get Form 4s on these, gentlemen.
Well, you of all people know the tricks of that you could buy just slightly below that Form 4 requirement, my friend. See or no?
I think he's over 10% here.
Good for him. Good for him. Go big or go home, Uncle Warren. Uncle Warren in his mid-90s, investing
you
for
know
the
what?
long term.
Shout out to Uncle Warren. He's not one of those tricksters, you know? They don't play those games over at Berkshire.
Can we talk about gold and silver? Because these are serious charts, guys. This is no joke. This is one of the things that, leads Strazza and I to believe that energy is next. That's your cue, Spencer, to throw up the next chart. There it is.
New slide 2.
New all-time highs for gold. And then so if gold is making new all-time highs, before we move on to the next one, I will tell you that one of the biggest mistakes I have made throughout my 20 plus years in this business is underestimating both the amplitude and the duration of price movements post a breakout from a base this large. Underestimating it. In other words, selling too early, not being greedy enough. That's my lesson that I wanted to share as I present something like this. And then when you go to the next one, because when you think gold, you see gold doing as well as it's doing, you think, well, where's gold's crazy little cousin? Kablam.
Yep. Yeah. Listen, I'm on board. Been on board with the precious metals, and now I'm embracing broader commodity space. I think you can do more and more in this group right now.
Today,
yeah.
Today's ETF power rankings was by industry group, and the top 4 are all materials. It's all gold and silver.
So, but more importantly, speaking of selling too soon, can you sell U.S. stocks too soon these days? I mean, what's going on here? Look at the market. Market was waiting for the PCE. They got the PCE. They're selling it again. We were on rollover alert, a couple days ago when we ran back up to those key levels from below, and they're slamming the market right now. JC, this could be an ugly close.
Who's slamming the market?
Look at the making new lows of the week. No.
The Dow's down 100 points, 0.25%. The S&P 500 is down 1/3%. You're saying that they're slamming the market?
Yeah, S&P is trading down to its lows of the week. Yeah.
All right.
You didn't you saw Wednesday's candle.
There aren't any stocks that are making new lows.
Oh God, this would be a bearish follow through candle, right? And then I guess the question would become what people are starting to talk about now is, do we break the pivot lows? So what do you think? Do the pivot lows go if we're closing lower today?
The pivot lows. The S&P low is 5,500.
Right.
So I guess I'm just not sure what you're talking about.
So this is the conversation everybody's having right now. Do we retest the lows, right?
Like the lows of 5,500 on the S&P?
Yes, JC.
That's over 200 points away. I mean, that's what people are talking about. Like whether we're going to go down another 200 points in the S&P 500. I don't know. That's what everybody's talking about. Who's everybody? I guess I'm just not sure. You're asking me if I think the S&P 500 is going to test the lows. That's what you're asking.
That's not something you think about. So you're just pouring in. You're fully long Tesla, just pouring in, aggressively getting long here. You're not wondering about will we?
I wouldn't say I'm fully long Tesla. I'm long Tesla. I don't have an S&P 500 position, so whether the S&P is going to retest the lows or not is not something I've been thinking about until right now when you asked me. I swear to God.
Sean asked me yesterday. My trader friends are talking about this. That's all.
Got it. And when your trader friends are talking about something, it's usually a good idea to pile into those things. Are these your golf trader friends or your in-house trader friends?
How could you pile into the simple question of, are we going to retest the lows?
Well, Sean was saying yesterday that he thinks that the S&P makes new lows, but he doesn't think the VIX makes new highs. I thought that was an interesting take.
If the S&P is making new lows, what do some of your stocks look like? What do some of these tops look like? Protect yourself. right? If the bull
Yeah,
market's
I just don't see that as a relevant conversation piece right now with the S&P nowhere near those lows. Like, it's 220 points above those lows. Like, so that's like the biggest concern. I don't know.
So
I think
you're
there's probably more important things to
basically
think
okay.
about.
So no, I didn't understand what you meant. What your reaction was about. So you're like laughing at it even being a possibility.
No,
The lows being retested.
no, I am reiterating that is not something that I was thinking about until you brought it up. And you're right.
But,
I did think about it for 2 seconds when Sean brought it up yesterday. And I
so
did think it was interesting that he thought that S&P is likely making new lows, but the VIX doesn't make new highs. I thought that was an interesting take. But no, to answer your question, it's not something that I'm thinking about at all.
why do you think it's such a far-fetched, like wild thing to think about? I guess is what
I don't think, I mean, it makes sense. I think that, fat Americans own too much large cap growth, and they are probably very concerned about that. And they're missing the giant elephants walking right past them because they're thinking about things like that.
What's the giant elephant now?
Whew, how much time you got? I mean, I think Tesla is one of those. I think energy is one of those. I think precious metals continue to be that. I think there's opportunities all over the world that we continue to find. And if you're butthurt about your irresponsible exposure to mega cap growth, then good. Fuck you.
Wow. All right.
So did you sell any of your mega cap growth this cycle, or
Like for my long-term accounts? No.
Yeah.
No. Actually, I put more in those accounts every month.
That's what I'm trying to get at.
Yeah.
Like you're not concerned about the U.S. stock market here. You think it's fine?
My kids go to college. One of them goes to college in 15 years. The other one goes to college in 16 years. Morgan and I aren't retiring for another 25 years. So no, I'm putting the same amount every month. And if the S&P 500 goes down more than 8% in a month, I'll double the allocation.
But we analyze markets for a living.
No, I understand that. And I'm not telling anybody to buy the S&P 500. I don't know that I've ever told anybody to buy the S&P 500. That's not a trade that I would put on here. So why would I think about it so much?
Okay. I don't know.
You trade since when do you trade the S&P 500?
I buy it.
The S&P 500?
I buy it. I don't sell it.
Yeah, I mean, I buy like a version of the S&P 500 every month for my long-term accounts. That has nothing to do with what we're doing here.
Okay.
And no, I didn't sell any because why would I?
Got it.
Yeah.
Loud and clear.
Okay. We got Kenny here. Let's bring Kenny out, and then we'll bring out today's future guest after that.
It's been a long time coming. They ain't cuffing my clock, they tugging. Putting up numbers, 99 pounds, and I still kept it 100. Hola. Yeah.
Kenny Glick in the house.
Gettysburg. Wow. How are you?
Dude, how many James Altucher wigs do you have?
I'm experimenting. This is a different wig now. I'm thinking of going skater guy now. Just chilling, I don't know. I've been up all night. I don't know. I couldn't sleep. I just had this Gettysburg thing in my head for some reason. I don't know what's going on. How are you this morning? I heard you talking about the S&P. Where are we going?
Now we're talking about someone who legitimately trades the Qs. Not only does Kenny Glick trade the Qs on a regular basis, for a long time, you were the only person I knew who traded the diamonds. I don't know. I've never met anybody else who's ever traded diamonds.
Diamond girl. Ooh, diamond girl. That's why.
Does anybody trade the diamonds? Can you raise your hand in the chat if you trade the diamonds? Or have ever traded the diamonds? I've never traded diamonds.
You know what it is? I wanted to be there for Dow 20,000. I mean, I called it almost by, 3.5 years in advance to the week. I called it.
It's pretty liquid, the diamonds, aren't they?
I actually haven't looked.
Yeah, of course it is. There's only one, JC. Of course it's liquid.
That's a good point, Spencer. There's only one. Yeah, it's a good call.
Hello, Laverne.
Nice. All right, Kenny, was that you?
$39 billion in assets, trades 2.7 million shares a day. Yeah.
Kenny, was that you buying the dip this morning in App Lovin'? It was, wasn't it?
App Lovin' and Lulu. Lulu. Come on, Lulu.
That's what I thought.
Yeah. No, I bought it. Want to see something cool there? Look at my chart. This is pretty sweet, right? Little faux show, bro. VWAP break on an earnings report. I heard this trade continues to work at a ridiculous rate. Meaning, listen, I'm not allowed to say some trades are guaranteed, but man, this trade just keeps working.
Don't say that.
So a little faux show, bro. There's your Lululemon. Love the stretchy pants. Again, I don't want to talk about whether this is an indictment on the economy for not buying expensive stretchy pants anymore. But you give me a stock that's getting crushed, and I'm looking for a VWAP break, especially when they kind of shake and bake it under the VWAP, and then it breaks. Again, very low volume. you do a couple of hundred shares and you get this pop right here, $300, 300 and a quarter. Those low prints of the pre-market are your stops, taking a little bit of risk. And then right when it gets back to the prior range from where it broke down from, I'm a seller right there. Went up a little bit more after I sold it, but then came right back to the VWAP, and we might be able to rinse and repeat. But app loving, a lot better. Again, when you're going to start attacking stocks, the Hindenburgs, the Andrew Leffs, or Muddy Waters, they're shorting the stocks before they make the announcement, right? Come on, people.
Aren't like half of those all retired?
Yeah, I think they're all done with this. Yeah, but I think the game is afoot. We've caught on to
and
what
that's
they're trying
really
to
a
do.
bummer. I know Strazza's a hater on like those short seller types. I'm a big fan.
I like their
I'm not a hater.
investigations, but I don't like the fact that people really think that they're doing you a favor by telling you, "Hey, there's something going on here."
Oh
with
yeah, I think
Carvana.
it's really important to make sure everybody understands they're doing themselves the favor.
Absolutely.
I don't know.
Absolutely.
And there's nothing wrong with doing themselves a favor like that.
Yeah.
Good for them.
Yeah, whatever.
Right. Especially when, again, that Carvana call, I was a fan of that call, but the stock had already fall from 250 to 180. Then they released that scathing report about how they're a scam company. It went down about 8 more points that day. It hit the 6-month VWAP and wound up bouncing 150 points.
That's right.
So,
That's right. So when Strazza is saying that they're all losers, I don't disagree with that. But what Kenny just said is part of the reason I love them so much, right? Because when they're wrong, holy shit, are they wrong, right?
Oh, so wrong.
So wrong. Like, it's so good, right? So we need those short seller types. Like, we need journalists and economists. Like, we need these people employed. We need these people putting ideas out. We need these kind of people distracting investors from what's important.
Right.
We need that, like us, like selfishly, like JC, Strazza, Kenny, Shawnee, like we are the ones who are most important here. We need those kinds of folks, right?
Absolutely.
Like, we want to appreciate, embrace it.
What I love is when the technical analysis guy becomes a scientist and they talk about drug stocks as if they know the pipeline and the efficacy and the FDAs and the trials and the stage this and stage that, and they know nothing. And it's just comical.
I like it when the technical analysis guy starts getting into the economics and the politics. That's always good too.
I make again, I don't even know what half these companies do, nor do I care, nor will I ever care again.
That's right.
Yeah.
Thank God, because it's it's better to just acknowledge that we don't know or care rather than pretending like we know.
Right.
That's
and as far as app loving is concerned, all I know, the reason I like this stock is because of McLovin.
That's
McLovin, app loving. Who doesn't like McLovin? Come on.
That's right. It's from a comedy movie.
Exactly.
And it's hilarious. Right. And that's why we like it. So
right. And that's when I knew the market was in full bull mode when those quantum stocks were going. We were buying stocks because the names had A's and I's in them, or anything quantum, like that quantum biotech stock. We were just buying it because the name quantum was in the name and it was working.
Remember that guy trolling you? Be like, "Oh, it's not even a quantum stock."
Yeah,
like,
no kidding. No kidding. Yeah,
exactly.
Right.
That's why we like it. Right.
I mean, if you guys remember Siberian Outpost, there was a commercial. The dude shooting gerbils through a cannon into a bullseye. I'm like, whatever that stock is, I'm buying it. Back in the day, that's a long time ago.
Yeah. Give me another name, Kenny.
I gotta look at volatility products again. I'm on the fear train again. I got that GameStop wrong. I sat there looking for a reason for it would squeeze. Man, they crushed that thing. I'm not even. I've excommunicated GameStop from my life after that. I just sat there watching my eyes. I thought they would somehow squeeze it yesterday. It was just a great short. But I'm looking at this market, seeing if it tests this the overnight lows. So I'm looking at NQ futures, obviously, which are the Qs. And we're headed back down to the overnight lows. If we break the overnight lows, and if UVXY is over $22, fear is going to take over this market. And that little relief rally that we just had, it's over, Johnny. It's over.
So 478. If we lose 478 on the Qs,
475.
Johnny.
Yeah.
Is that from Home Alone?
It could get ugly.
From Home Alone.
What?
It's over, Johnny.
It's over. No, that's Rambo. Come on,
Snake.
Oh.
Right.
It's over, Johnny. Over. Nothing is over. Come on.
All right. Kenny, keep on keeping on, man. Hit thebid.com. Get newsroom.
Be careful out there, folks. This is good. This could be a scary day, but scary good.
All right.
Have a great weekend, everybody.
This could be a scary day, but
Scary
maybe
good.
scary good. So
Scary
I
good.
have no idea, right?
I don't know.
Love that.
Who can say? Maybe our next guest can say. David Cox, Raymond James. He's in the house.
Do it. Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Mr. Cox, how are you, sir?
I'm good. You?
Oh, just usual. I'm just a punch bag over here. They're just telling me how dumb I am and how like I must be crazy because I'm not spending all day wondering if the S&P is going to trade the lows. Like I give a fuck. I couldn't tell you the last time I traded the S&P 500. Like,
Yeah.
Am I crazy because that's not what's been on my mind all week?
No, of course you're not. Where you got me was Munger's a closet technician. I love it. Love it.
Yeah, he was.
Yeah.
Are you kidding me?
No, I great comment, right? Great
Chapter
comment.
7 of The Intelligent Investor is all technical analysis.
Yeah. I haven't opened that in a while. I should
Dude,
pull that
Ben
open.
Graham, hardcore technician, dude. Trend follower, behavioral, as technicians, we analyze the behavior of humans, right?
Sure.
And Ben Graham was doing exactly that. Following trends. Like, this is technical analysis, bro.
Yeah. Oh, absolutely. Absolutely. Nice.
They think I'm crazy, David.
No. You're a bit of a wild man, JC, but I like it. And I think everyone likes it. It's fun. So what do you want to chat about?
I love
guess.
Canadians.
Canada.
I really love Canadians. Can I just tell you?
I know.
I feel like we have so many Canadian guests on here, and every time we have a Canadian guest, I just want to go out of my way to say what a great time I always have in that country. I eat well. I get treated great. Fantastic country.
Yeah. Yeah, nice. Well, I'm glad to hear that. I mean, that was a good dinner that we had in Toronto. Remember?
Oh, yeah, that was cool.
Yeah,
that was cool. That was fun.
Good little crowd. Yeah, for sure. Cool.
All right. So I'm being told that I'm crazy because I'm not wondering if the S&P 500 is going to retest the lows. So let me ask you, are you wondering whether the S&P is going to retest the lows or no?
Well, I think that, like Strazza just said a minute ago, I think it's a bit early to sort of talk about, kind of the selling U.S. stocks, right? So, when I look at the S&P, I mean, obviously there's been some selling. I mean, that's obvious. But, I'm an RSI 5 guy, right? And just looking at the weekly chart, I'll tell you, the RSI 5 on a weekly chart does not get oversold more than once a year, typically. Okay, now if it's trending down, that's fine, but we're there. We're there right now. And so the last thing I want to do is get sort of crazy negative in a situation where we've already had selling. So it's hard not to like this. And I think the issue I've got with this is that, all this international flavor and, you're going to want to bring up Canada and all this stuff. I don't know. Like, I mean, was that just like I'm not convinced yet that internationally is just suddenly guaranteed. Do you know what I mean? Like, I feel like we've just had a bounce and a counter trend move on a relative strength basis.
And so, the dollar got the crap kicked out of it.
Yeah, for sure. For sure. So, we can see almost unwind of all these little kind of short-termisms. And I don't know. I mean, sure, big cap tech, I get it. It's weak. But the S&P, I don't know. I mean, I think at this point, I think the risk reward favors, owning it, not sort of running from it. So short term, we'll see what happens. But
David, for your day job, I know you're YOLO in crypto on the side. And have for quite some time. But for your day job, are you only in ETFs or equities too?
Oh, no, equities too, for sure. Absolutely.
And you're looking all over the world? You could be in China, Poland, Latin America. Doesn't matter?
Well, yeah, I trade North American stocks. So, I mean, it's going to be ADRs on the international side. So, you know what I mean? Like, I mean,
would it be like in an FXI or an EWZ?
Sure, but I don't mind owning the holdings, right? So when you have strength coming out of one of the ETFs, of course, I want to know what the leadership is. And of course, I'm willing to contemplate the individual stocks. Because, I mean, again, it's the concept that, hey, if you can do the research, it's great to say something's got relative strength. But within an ETF that's got relative strength, you've got relative strength again. And depending on your sort of, overall risk tolerance, sure, you can grab stocks. So for sure. Lots of stuff.
So you're not necessarily avoiding the FXI or the EWZ. You just like the juice and the individual components better.
For sure, but I would say it actually there's context, right? So actually, this is a good example because in the last few months, with deteriorating market breadth, I think there's a lot to be said for hiding out in the ETFs, and especially when it comes to buying into, let's call it, you're undervalued or you're out of favor areas. So let's use energy as an example. I like the idea of, you can kind of stand in and take some exposure without kind of standing around too specifically, because the names are more volatile. And I think the name volatility has actually been a lot more prominent than certainly the VIX shows us, at least from my perspective. A lot of individual names, especially some of the major leadership, they've come under pressure. And so hiding out in the ETFs can be a way to sort of not only also deeper digging, if you will.
We're, depending on when you start the clock, some people start the clock in October of 22 for this bull market. I'm more of like a June 22 kind of guy when things actually started to improve. Either way, this puts us in year 3 of this bull market. You think a year from now we're going to be talking about this still being a bull market, or are we going to be in the depths of something a little bit more substantial? How do you think about that, or is it not something you think about at all?
Well, it's for fun. It's fun to think about these things, I guess, right? Obviously, I don't need to make some kind of forecast or prediction, because obviously I'm willing to roll with the market, which you are too. At the same time, I think the general environment here, where you've got all these bankers willing to sort of constantly prop up and play games and do funny things. It's hard to imagine how, asset price inflation doesn't just continue to happen with the monetary regime we live in. So I think bigger picture, I think that asset prices rise. And I think that the person who struggles most is of course, the younger generation who owns no assets. And they're the loser in this whole situation, right? This whole kind of environment we live in. So I don't know. Is the S&P going to peak out? Obviously at some point it goes down in a more pronounced kind of way, but it's tough to sort of go and get overly excited about what we've just seen in the last couple of months and start to talk about big tops. It's not what I'm going to do. I need more evidence.
Talk to me about sectors, David.
Yeah.
The high beta, high growth areas like particularly technology have really been hit, while others simply are just not. So when you've seen this rotation that started last summer, for that matter, out of mega cap American tech flowing into other areas, other parts of the world that have more exposure to the other areas, right? Where's your head at here as we finish? After today, we only have 1 day left in Q1. So, that means new monthly charts, new quarterly charts next Monday night.
For sure.
You know where I'll be.
Absolutely. Yeah.
So going into Q2, how are you thinking about allocation?
Well, I think the other day, I was looking at it, changed a little bit, of course, but, it was a couple of weeks ago, I looked at it, I was like, year to date, I was like, oh my goodness. Sectors are in better shape than you'd want to think, especially if you're staring at the S&P, for example.
That's right.
Which obviously with a 30% weighting in technology is got a significant chunk there.
Yep.
So, when it comes down to, let's just, go to the Canada example briefly here. So, Canada's got very different sectoral composition, but Canada, and I think certainly lots of the emerging markets, right? The value versus growth tends to be something that kind of, correlates, right? And when I look at my big picture value versus growth charts, like IVE versus VUG, I don't see anything more than a bounce and a downtrend right here. And I think it's way premature to start talking about, wow, values in an uptrend, which again adds to my hesitance in getting too excited about some of the things we've seen in the last couple of months, unsure whether they're going to be legitimate. So when you look at the S&P right now, I'm looking right now year to date. What do you got? 3, 4, 5, 6, pretty much 7. Oh, sorry. You got 9 sectors up? Yeah, 9 sectors up. There's only 2 down, right? So I like that rotation. The financials have been pretty good, right? Now, again, individual names have been volatile, but communications, yeah, it's a good sector, right? Not maybe as broad, but.
Are you putting too much emphasis on the year-to-date numbers?
Well, I look at all time frames. So in fairness, when you want to go, or certainly when I want to go, and I'm going to plot weekly, relatives, for example. So if I'm going to look at any sector, I want to see the relative performance, and I want to see the absolute performance. But you've had outperformance, like the U.S. financial sector. It looks like it bottomed actually relatively in the end of end of 23. And so now what do we got? We got basically a year and a half trend. It's pretty good, right? That's a relative trend of outperformance. And you got an uptrend with weekly higher highs and higher lows on the chart. It's pretty good. Technology is obviously the opposite, right? Technology massively came out of the gates and now is faded considerably. So I like the financial sector. I mean, because I like relative strength. And I think there's a lot of legitimate names in there. And so I don't know. I don't have a problem continuing to add to that space. Because some of these other areas, like these, the U.S. obviously doesn't have much exposure to things like materials. The Canadian material sector has got much more breadth going on than the U.S. space. And again, very different compositions, but there's no relative strength, right, from the U.S. material sector, for example, like versus the SPY. I mean, like, come on, it's like major multi-year downtrend. Like, what else to say, right? So this is where we get to start to pick and choose, because when you start to talk about diversification, you start talking about, I think different areas like, let's say, energy materials. Well, Canada obviously has a lot of that stuff going on, which is where that flavor, I think, starts to come in. I think starts to help, because when you look at underlying commodities, I mean, I've been surprised myself. The total return commodity index has been at highs. Now, I know there's this carry trade, or sort of interest bearing. I'm not even an expert in this field, but all I know is that the commodity total return index is basically at highs. I'm talking like crazy highs in Canadian dollars. And so I think the materials and the energy trades are certainly things we want to watch. But at the same time, I think I'm willing to admit that, the underlying equities have been pretty poor for a long time on all this stuff, like copper, obviously recently, energy, gold stocks, it's only recently that they've trying to catch up.
And
right?
You're Canadian, so
Well, totally. And the issue is that when I look at these cyclical areas, and the truth is that I think they cost a lot of mental capital, right, to be involved with. And so financial capital, we're all familiar with that, right? Sure, we take losses, we manage portfolios, but the mental capital involved in an area like gold stocks, I think it costs a lot to be involved. Like they move in bursts, right? And then they fade in bursts. And the movements are significant. So I, kind of wade in, if you will, right? And I think a lot of us do ourselves a disservice, because, we throw portfolios together, and you throw in the sexiest stuff, and you don't realize the risk you're taking on. You guys were already talking about gold. Well, I mean, gold bullion as an investment relative to gold stocks, not only has it done way better, but the actual underlying inherent volatility is way less. So your portfolio is like way easier to tolerate without having to have the noise. You know what I mean? And I think that is important, because just like you were already saying earlier today, investors that are so committed, oh my goodness, gold, I got to have gold stocks. Well, hang on, like let's be open-minded to all opportunities. And why would we ever want to take more risk if a less risky option of maybe even the same theme exists? You know what I mean?
I know exactly what you mean. I want to double click there, and you're talking about financials in the chat. They're saying financials look good, doing well. The answer is yes. European financials are going to close at all-time highs. If the week ended today, European financial would be all-time highs. Japanese financials also all-time highs. Year to date, we've got financials up 4.2%. Over the last year, financials are up 23%. And over the last 2 years, financials are up 60%. So to answer the question, financials have been doing well. The answer is financials have been doing better than I may have ever seen them do, actually, since the 2000s. That's how well they're doing.
For sure. And I'm going to throw another chart out there, because if you take a look at, like, for example, XLF versus XLK right now, I mean, again, you got technology lovers, right, that won't ever turn their backs on it. But the reality is that XLF has been moving up, and it's been moving up pretty strongly for the last, kind of year. And I think that has to be acknowledged. And so, again, we don't want to be biased in the sense that, it's kind of, I don't know, like something we've never touched, or it just doesn't make any sense. Right.
Yeah,
so the Canadian.
You want to know, and Berkshire Hathaway, not only did Berkshire Hathaway make an all-time high yesterday, but Berkshire Hathaway is also making all-time highs relative to the S&P 500.
For sure. And
what a legend, Uncle Warren.
I'm glad you brought that up, because that's actually another example of a stock, though, that's actually a low volatility stock, right? It's a very low volatility stock. I was just looking at my ATRs this morning.
I think it's the biggest component of the low volatility index, actually.
Well, yeah, okay, I'm not surprised, but I mean, essentially, I think it's got about 60%, 55% of the S&P volatility, and so that's a low risk way to take relative strength and absolute strength and inject into your portfolio, right?
When I look at the low volatility, it's number 3. But the low volatility index is actually equally weighted. So it's or maybe not exactly equally weighted, but kind of. So it's Coca-Cola, Marsh & McLennan, Berkshire Hathaway. All right.
Yeah. Yeah.
And then oddly enough, something called Republic Services Inc.
Yeah. Well, I'm glad you brought that one up.
I don't
You know why? You know why? So Republic Services Inc. This
you
is
know it.
classic.
You know this name.
I do know it. And so I got to tell you, like, first off, like, zoom out. Okay. If you zoom out, you put a 20-year, actually, let's make it 25 for fun. A 25-year chart of Republic. You tell me what you see. We're talking back of the room test, big time. Lower left, upper right, like throw in a 2008 correction, whatever, right? Look at that thing. So this is one of the stocks. So we've built our own universe, okay? And so instead of looking at all the stocks, I basically every quarter I screen the stocks that have outperformed the S&P on a 1, 2, 3, 4, 5, and 10-year time frame, and absolutely RSG is there. And so yes, I know it. But I mean, what do you want to do, right? If you want absolute trends, you want relative trends, it's a great stock. Dude,
this is a waste management industrial. Chris Brown in the chat saying Republic is trash. Literally. Republic is literally they are trash. So yeah.
Absolutely.
The waste management business turns out to be good, huh? Tony Soprano, shout out.
Well, I got to tell you, because you know what's had longer relative strength than that is WCN, which is a dual listed Canadian name, right? So that's Waste Connections, and it's the same deal, right? It's the same trash, I guess, but at the same time, look at it. Like, it's been a stronger chart, right? Relative RSG's been outperforming the last while here, but WCN, another long-term stock that's outperformed the market. So I really like the idea that when you can kind of, zoom out and you can find like, massive relative strength leaders, like these are, I'm going to call them name brand stocks that not necessarily everyone knows, right? Like they're massive leaders and winners in the market, and yet somehow people don't know them. And that's because, again, we're all biased toward, whatever, the stuff we think we kind of know and can understand.
David, is energy ever going to get going?
I don't know. I came back to my office after I sat beside you there and the thing. I was looking at your XLE call, your big pitch on those, whatever it was, right? The 130 calls or whatever you were. I wrote it down.
Oh, yeah.
I hope you know what I mean. Those. Yeah, 130.
December 26 expiration.
December 26. I think there were 130 strikes, if I'm not mistaken.
That's right.
Being mentioned. So,
that's right.
I mean, energy, like, I don't know, this is another one of these mentally capital intensive sectors, So, I mean, the truth is, though, there's leadership within, right? So here, I'm going to actually cherry pick this because I just took a look yesterday, I think. And so if you look at the XLE holdings, like the S&P 500, you'll find no stocks that have outperformed the S&P for 10 years, okay, in the energy holdings. But you will find a couple. If I mention, for example, LNG and TPL on the U.S. stocks, you'll see those stocks have actually outperformed not only the market, but have certainly outperformed the sector. And so again, they meet that screen that I'm talking about, where you've got massive relative strength leaders. Because right now, like the space is so kind of, I don't know, disconnected, and it's just so tricky, right? Like we've got Canada's got a lot of energy exposure, and yet, I mean, there's energy stocks that I could bring up that are just like complete garbage and like basically plummeting. Like I don't know why. Like I don't pretend to know why, but they're brutal compared to like, whatever. So whatever the leaders are. And so it's a pretty tricky space. And so again, to me, either you're going to cherry pick a couple leaders and have some exposure in your portfolio, but I have a tricky, I don't know, it's a hard space for me. And I don't know if they're going to go. I'm not sure. Not convinced.
You like that the bond market's pricing in higher inflation here as crude oil potentially tries to break down? I don't know, David. CTAs are super short. Commercial hedgers loading the boat. I don't know. It seems like a fat pitch, David. No.
I think yields are continuing to go higher. I love
baseball in Canada. Are you a baseball fan?
Not really. I mean,
when
not
I talk
directly.
about fat pitches, you know just how what a great opportunity that is.
I understand what a fat pitch is. Yeah.
All right. Just ask him. Just ask him.
You know those big balls when they come in, they lob it to you instead of the 90-mile-an-hour fastball. There it is, right?
Not everything revolves around hockey. All right. No, hockey has a place, right?
No, but, absolutely.
Cubans, we play baseball. We don't know nothing about ice or hockey.
Do you know what lacrosse is?
Cubans also definitely don't play lacrosse. Yeah.
Right.
That is, Cubans don't know anything about lacrosse. We find the whole thing very strange.
So I love to me, like this whole fight over this like to me, I posted the TLT chart yesterday and it's down 50, I don't know, what is it, 53%, okay, from those like highs 5 years ago. I love that, right? I think this is actually awesome. And I think that last year, when you started to see the Fed was mucking with rates, right? Like you had basically long yields were basically rising anyway. And I love that. So I look at the weekly chart right now, the TNX, like the 10-year in the US. And I mean, again, there's noise, of course, but a weekly chart, it's tough to I can't be bearish this chart. I think that, I think that commodities are, without question, have upside risk, right? Obviously, copper's already moving, gold's obviously moving. I mean, oil is like whatever, the thing that maybe will come along. But the point is, I think that the tools that these banks have are I don't know. I think the bond market is saying, hey, there's no way that we're going to be basically bringing rates down. And that whole facade of whatever we were looking at years ago of this whole zero business it was a joke when it happened, and it was like ridiculous when you know what I mean? Absolutely absurd. Right? You and I both have seen absurd things in markets, but obviously zero yields and negative yields in Europe, they're dumb, right? Who honestly can put their hand up and say they bought negative yielding European nominal yields? Somebody, right? Somebody. And of course, they won't put their hand up.
The best was when German yields were like pushing the zero, like we were saying how there was resistance at zero, right?
Yeah.
Like it's that kind of stuff that makes me laugh, David. I'm like a 2-year-old.
Absolutely. Absolutely. But you know what? I'm a fool the same as anyone else, because I didn't take the 1,000 barrels of oil for free and put it on my lawn, right? That was a mistake.
Well, it was a little more complicated than that for that one.
It was complicated, but it seems like I should do it at the time, and I didn't do anything about it. But whatever. What do you do?
All right, guys. I'm gonna hop. David, you're welcome to stay here as long as you'd like. I gotta hop, but I just want to say, weekly charts later today. Monthly charts on Monday. Who's more blessed than us? I mean, come on. Who's more blessed than us?
Well, it happens 12 times a year. All right, David, thank you so much for coming on. I know it's been a minute. I appreciate you being flexible with the schedule, and we'll talk to you again down the line. Anything we missed, anything that we're not paying attention to right now that your clients are asking about or talking about or whatever?
Well, yeah, hell, I'll make another mention of Canada here. So, of course, everyone up here is all up in arms here about, your new president and tariff this and, tariff this. And, the reality is that I think it's hilarious because ever since the tariffs got kind of thrown out there as a threat, and now, of course, these dates come and go, the Canadian dollar bottomed and Canadian stocks have been showing relative strength. So what's new, right? What a Canadian thinks of like, oh, my goodness, calamity is upon us. Stocks are coming on and
you're welcome, David.
Geez. Exactly.
You all should be thanking us. I don't know what's going on up there, but
exactly.
Yeah, everyone should be thanking America. I don't know I don't know. I don't get it. All right, David Cox, portfolio manager, Raymond James. Dave, thanks a lot.
Yeah, thanks very much.
All right,
take care.
All right, listen, it is crypto, or it is Friday, which means it's Crypto Friday. I've got the crypto man himself, Louis Sykes, in the house. Let's bring him out and talk about crypto. If he's doing anything, if he's nibbling a little bit. I don't know what Louis is doing. Let's find out. Louis, where you at?
Got my fingers on the pulse, avocado and toast.
Morning, Spencer. How you going?
Oh, what's up? Wait, can we just tell people real fast how the story of how you left your laptop in New York? Mm-hmm. I sent it to you, and New Zealand Customs said no.
They literally destroyed it. So I left my laptop in New York, went to New York and hung out with you guys. It was amazing. Had a great time. Certainly learned a lot. But then I left my laptop there, right? And so I asked you to send it over back to New Zealand. You did. And then I got to customs, and these guys just literally destroyed it. Like, they destroyed my laptop. Like, they said, hey, there's not enough documentation. We're destroying your laptop. And so
they didn't give it back to you destroyed. They just destroyed it and said, we destroyed it.
Yeah, basically. They didn't give it back. They just like destroyed it. I don't even know what destroys means. Do they just like I don't know, man. New Zealand can be strict, right? Going back to COVID, we had those lockdowns that we had a single case of COVID, entire country went into lockdown, and so these guys can be Nazis out here sometimes.
Wow. Wow. Man. All right. Lesson learned. Don't send Louis any electronics of any kind because they will destroy it apparently. Anyway, speaking of things that can't be destroyed, the blockchain, Louis, is indestructible. Let's talk about that. Let's talk about Bitcoin. Where you at these days? Key levels in play? That's still the story.
Look, you asked, whether I'm doing anything, whether it's still just the doldrums, whether I'm nibbling a little bit. I sent you guys a few charts. Let's just pull them up. So we've got AVAX here. We'll look at the AVAX. You're seeing a lot of charts like this where we had that break below, and now we're back above this key level of support, right? And so there's so many coins, and the amount of damage in crypto, right? It's been actually quite magnified, and it's really taken a lot of people off guard, particularly with the new administration. Everything's been really bullish. So many great news headlines. Every single day, there's just more SEC lawsuits coming out that they're dropping. And so this has been a constant theme now for weeks, if not for months. The tune is shifting in Washington. Policymakers are completely changing their mind under this new administration, and we want to become this new crypto capital of the world, right? But crypto under these conditions have really just got obliterated, right? And so now we're in this position where we've just crashed, and a lot of these coins are now retesting or have gotten back above support. We've seen obviously stocks beginning to recover back in the US markets over the last few weeks, and crypto has been dragged higher along with that. And you're seeing a lot of coins now that are just at these major levels of support. We're looking at AVAX here, that support level. We rallied, and then we're back to the support level, and then we failed to break below that support. Now we're back above. And so again, I think that points to the fact that at least there is some bid here. Now, there's a difference between these trends just stopping and these downtrends stopping and a new uptrend beginning, right? And so I think the base case is we're entering into this period where the market is just looking forward to the next catalyst, right? The market needs to understand what's going to be happening with this new strategic reserve and just get a bit more clarity from policymakers. And then obviously the macro conditions need to improve, right? You need to see the S&P 500 beginning to hold 560. We're pulled back the last few days, and so that's a really big level to hold. But look, I think it's just really messy right now. But I think these are some pretty big levels, and at least we're defending them for the absolute bare minimum.
This is a daily, right? Yeah.
Yeah.
All right. So, I mean, yeah, it did break that support, but it couldn't hold the break, right? So, all right. Wait, what else you got here? Is it is that the same story pretty much across the board? Is messy and wait and see?
I think it's messy, and now I think my base case is that we enter into a bit of a basing period again while the market just recalibrates.
All right, basing
figures
is
out
good.
what the hell just happened, and looking forward to the next bullish catalyst. We see this all the time. And so I think just being a little bit patient, and then maybe even just nibbling a little bit. If you're really just teething to get into crypto, I think just defining your risk. We've got a lot of these support levels. So we're looking at AVAX right now. Let's pull up the Solana. If you got that there. Solana, same story, big level of support, broke below it, and now we're beginning to rally over these last few weeks. So at least there's these big levels of support that the market is respecting. And then Solana, what else did I show you? There was another chart there. Sui. So Sui, so we had this breakout, and then we've retested that breakout, and now buyers are stepping back in, albeit we've called back quite a bit today. But again, just reiterating that the market has held where it needs to, and so it's not an absolute disaster, right? It's not an absolute disaster. If stocks had rebounded over these last few weeks and crypto just wasn't doing anything, right, then that could be an absolute disaster. But that's not happening. We're holding where we need to, and at least for now, that doesn't have me overly pessimistic.
I know you like to do a lot of intermarket stuff. How closely are you watching like U.S. stocks right now to sort of point you in a direction for crypto?
Really close, because look, the correlation that's existed with crypto and US stocks has been rather precarious over the last few quarters. But when you actually look at this more closer, shorter term, you're actually seeing this correlation get reestablished with macro. Go pull up software, IGV, and Bitcoin, or just the S&P and Bitcoin. And that correlation has really cooled off over these last few quarters, but more recently, the correlation's actually been there. And I think that's just indicative of the fact that there's this new administration, right? And so the market is really waiting for this catalyst, and crypto more so than legacy markets right now. And so I think, yeah, and so you just pull the perfect chart. This timely. Whoever's in the background there, or whether this is you and Spencer, that
was Fonz, man. It's all Fonz.
Yeah, so look, you can see IGV software and IBIT bouncing at the exact same time, whether that was earlier in the year in January or whether that's more recently now in March. And so, look, the correlations are being reestablished, and I think that's really important. I think you need to see the US markets beginning to hold. You need to see growth in the US, the Magnificent Seven, beginning to hold as well. And I think all of that would be really, really productive for crypto. And so I think more now than ever that you want to be watching what's happening in the macro landscape.
Do you think if we got all those things that crypto would resume its place as like the beta leader or the corner with the most juice?
Absolutely. Yeah. There's no doubt in my mind, right? And so we think about this from a spectrum, right? Where we've got risk and return. And we've got, on one end, we've got, like, say, the US indices, right? Yeah, the passive investors. Then maybe one step further, you've got the sectors. Then maybe another step further, you've got speculative tech, like maybe ARK, for instance. And then you've got, say, Bitcoin, and then the altcoins and NFTs and meme coins, right? That's always how we've historically viewed this relationship. And so, again, I think if we get some sort of rotation here, we're talking a lot about international stocks. And what we're seeing in international value is obviously very bullish. We just had David on, and he was just talking really great about sector rotation, about international, about Canada. And so that international rotation has just been so present. But I think if we get a little bit of a pause in this, we've obviously had this massive thrust in international, just money leaving the United States and exodus from the United States and international into value. I think if we see a little bit of a pause in that relationship, and we see some money beginning to flow back into US growth. Again, this is more hypothetical. We haven't seen it yet. But I think in that case, crypto could actually do really well, at least in the short term. And so I think that's something that you really want to be looking out for.
You know what might also happen if we get this kind of a return to a bull market is that Solana ETF finally that we've been waiting on. Sheesh. It's taken so long.
Yeah, look, and again, the market really just kind of needs some catalyst right now, whether that's from the regulation side of things, from the strategic reserve, maybe another ETF. It's really hopeless out there. You know, people are looking people are looking at their coins, and these things are down 50, 60, 70%, right? And so there's been a complete readjustment in expectations right now, and the market just obviously clearly has had a different agenda to all of this positive news that's come out. And so, look, I think understanding that relationship with the news cycle, we've always seen the market move down in the context of a news cycle that's never been more positive for crypto. So I think also looking at the relationship where if we do begin to get positive news, what's the market's reaction to that? If we get some positive news, can the market actually build a rally off that, or is it just going to reject it like it has been over the last few months? I don't know. So I think it's something that you want to look forward to.
If we could summarize all of this, basically what you're saying is crypto people do the one thing that you haven't had to do and just be patient. Just wait. Just wait for something to happen. I know that's sort of counterintuitive to crypto as an asset, but yeah, maybe just everyone just wait. Let's just wait a few weeks, a few months, I don't know, a few quarters. Let's see what happens, right?
And look, my conviction that this bull market is over is rather small, right? I think there's still going to be plenty of opportunities. When we look at our cycle analysis, we're still mid to late cycle, so I think there's still certainly room for opportunity, right? I certainly think that this cycle isn't going to end with Bitcoin not hitting 150K. I think there's a lot of positive, at least fundamental shifts happening within this entire landscape with this new administration. I think it would be really difficult and really strange to see this crypto cycle end here rather than having one last hurrah. And so I think knowing that, just waiting for that confirmation, and then once we do get that confirmation, we can go back to the races, we can go back to making money. But just in the interim, maybe just nibbling a little bit, but just setting our expectations reasonably, I think is probably the best approach right now.
All right, Louis. Appreciate you as always, man. Thanks for getting up early or staying up late, whatever time it is where you are, and keep on fighting the good fight, man. All right.
Hey, thanks, Spencer.
All right. Hey, Fonz. I didn't realize we'd be done at this time. Fonz, you want to pop in? We got. Oh, look who it is. We got Steve.
Yeah. Fast market. We could talk to Fonz quick. Then we got some trades to make.
All right, let's talk to Fonz quick.
Yeah.
Hey guys.
Hey.
What's up?
How we
I
doing?
don't know. You tell
Good,
us.
man. Good. Everything good.
You tell us what's up, man.
Yeah. Okay. Very fast. We have some trades to bid. I know that.
Okay.
So I wrote yesterday about how significant was the bounce in the S&P. So basically, what I did is I took the recent drawdown on the S&P. Came down 10%, and I draw some fib retracements. So in strong downtrends or uptrends, in this case a downtrend, we usually don't see the 38% exit. So at that level, the S&P got rejected the other day. It's not a surprise that the VWAP from the all-time highs, it's at the same zone. So basically, buyers failed in this bounce, in my opinion, are giving the sellers another opportunity to take control. So I also dropped the VWAP from the March lows. So we're in that tight range between those two VWAPs, and any resolution, any close beyond these levels can determine whether we broke out and we head to higher prices, or we visit the prior lows from early March.
Alfonso, it was significant, the bounce, in the sense that it was full of information. We could have bounced to and through the 38% and had something that would look a lot more standard, right? But what we got was something that can only be identified as a bear market bounce. By definition, as a technician, this is what bounces in bear markets look like, not bull markets. So I think rather than us getting some sort of mixed evidence and we get a really strong bounce off the lows and then the bears come out and fade it, this evidence is clear as day.
Yeah.
Is it not?
Yeah. A weak bounce at the end.
It's like, you ever go hunting, Spencer?
No, dude, I'm from New Jersey. No, we don't do that.
So you're supposed to aim at the front leg, but really what you can do is if something's moving, you aim a little bit in front of it. So you're set with your target, and then you're waiting it to get there. And then bang. That's all this was. The bears saw this. They said, oh, we're deeply oversold. Okay, let's back off. Let's aim. Let them run it back to the VWAP. And this is where they're going to come in and hit it. Plain as day. Such an obvious level.
Mm-hmm. Couldn't agree more.
You're sitting up there. You're in the dunk tank. You know it's coming. You know you're about to get really wet. You're sitting up there. You're cold and lonely. You know something bad's about to happen. You're never volunteering at the church fair again. And then bang. Friday in a bear market. Look out, guys. Look out. Yikes.
Yeah, I mean, look, so far, we're heading in that direction today, but we've been open for 15 minutes, so let's see what happens, right?
All right, I got two for you, Spencer. I'm going to leave them with two. First
of
all,
do you got?
Throw up the average drawdown S&P 500 chart, Alfonso, real quick. We're in a bear market, okay? The average stock beneath the surface is down more than 20%. This is the first time in years that's been the case. So we're already there, right? The question is now, where's the support? When do we get in? When is there evidence of a tradable bottom? But the bear market's here. Don't be confused. Two ways we'll be able to confirm that very soon, I think. Two simple charts. You got ITB massive distribution pattern. If that prints, and that's gonna print on the next little sell-off, okay? So that should print very soon if it's coming. That'll be a top. Do we have that? And then on top of it, I don't know if you marked this one up yet, Alfonso. It's okay if you didn't, but you got XSD, which is equal weight semiconductors, clean as day top there, call it 200, and SOX. You could use the SOX, SOXX. Got a little range around 180, 200 there as well. If those are top, Spencer, say goodbye. Say goodbye.
I'm gonna just sidestep the whole bear market thing. We could go back and forth on the semantics of that, but whatever. The data is what matters, right? So, yeah. I mean, I don't know. I don't know if I can argue with what you just said, right? Because it makes sense. But I'll be honest, I didn't realize it was that high either. 20%,
22
under the surface.
Yeah. NASDAQ too.
Yeah. I mean,
so the point is, it's already been damaged, right?
That right there is why people in quotes are like antsy and pissed, right?
Yes.
It's not because of the indexes; it's because the 22% is the average drawdown, and everyone is looking at their portfolio going back to the last few months and being like, "What the hell? Where'd all my money go?" So,
and look at what that indicator looked like. You know, it hit low 20% early 2022 as well at the beginning of the last bear market, but it can get worse, right? So there's a time to buy the dip and there's a time to not buy the dip. And I think, we outline our levels, make our checklists, and, we can check the boxes as we go, but there's been little to no damage repaired just yet. So one step at a time.
Third step there, you forgot to mention, is the levels, the checklist, and the shopping list, right? That's also... Right. What are you going to buy?
That's right.
Everyone's got their own lists.
Good time to prepare.
That's right. Okay. I know you guys got some trades to put on, so let's go do that. We'll hop off here. Thank you everyone for watching. Thank you to Alfonso. Thank you to Louis. Thank you to David Cox. Thank you to Kenny Glick for stopping by. Thank you, chat, as always. I don't mention this enough, but we do have a lot of good stuff in the description on YouTube. If you click on the description, there is the link to get the daily rundown, which I send, which has charts, and Alfonso's daily note. The hot corner is in there. The Strazza letter is in there. These are all free things, by the way, free content in your inbox every day. So check that out. There's a lot of good stuff we do for free, in addition to the stuff we do for our members. So we got that going on, and that's it. It's Friday, man. It's we got things going on. So this is going to be our last stream of the week. Thank you everyone for the participation as always. Thank you for all the likes, all the comments, all the chats. See you guys on Monday. Have a great weekend. It's going to be really nice out in the Northeast. It's going to be 80 degrees tomorrow. It's going to be hot. I know, 80 degrees.
Wow. That's nice.
That's good Fahrenheit, Fonz.
Enjoy it.
Yeah. All right. Thanks for watching, everyone. Go make some money.
Adios, everybody.
Bye.
I can't take no loss. I don't even know what it costs.